Hi, everyone, and welcome back to Stephan Livera podcast, brought to you by Bold. For American listeners, you can buy Bitcoin at getbold.io. Now, joining me on the show today is Shehzan Meredia. Shehzan is CEO and founder of Lava, and I thought this would be an interesting conversation for listeners because this is a DLC-based lending product or platform, and we're going to get into all the details around that. But first of all, welcome to the show, Shehzan.
Thanks for having me. I'm a big fan of the show. I've been watching it for a while.
Well, thank you. I guess we won't get deep into the technicals to start. Let's just start with a bit of an overview. What is Lava? What are you doing? What's the broad opportunity you see?
So Lava is building the most secure way to borrow against Bitcoin. So it's really a product for Bitcoiners. I call them like base Bitcoiners that have a lot of their savings in Bitcoin. They don't want to sell, but they want some expenses that they need to fund. And so they can borrow against their Bitcoin. And unlike the custodial products that are available in the market, honestly, a lot of them have gone bust over the last few years. Lava is non-custodial, so you don't have to trust us with custody of your funds. You have confidence that when you borrow against your Bitcoin on Lava, that we don't trade or we hypothecate your funds. And you actually have cryptographic guarantees of that, not just legal or reputational assurances from us, which is really the big selling point for Bitcoiners that can make them feel more secure when they're borrowing against their Bitcoin, that their collateral is safe. So Lava is a borrowing platform for Bitcoiners, and really, when a Bitcoiner comes to Lava, we want to be their like the product that serves their journey from borrowing against their Bitcoin to how they spend plus after they borrow against their Bitcoin.
Gotcha. And so just, before we dive into the technicals, but just give a bit of an overview of the process. Like, I guess what most people are used to is this idea that, okay, maybe you sign up on the app, you might deposit some Bitcoin, borrow against it, and now you've got stablecoins or fiat in the traditional system. And after that loan term, you need to pay it back. Is that the basic fundamental flow? Can you just talk us through that?
Yeah, for us, like security, for me especially, has been like the biggest reason for building this product, just building a more secure product. But I would say we have the best user experience of any loan product. It's really seamless. You can use our desktop app or mobile app. You download Lava. You just decide how much you want to borrow. There's no documentation required. It's globally accessible. You lock your Bitcoin into this new address, like a smart contract, let's say. We can go into the details of how that works. It's on chain. You're not bridging your Bitcoin. You're not giving up custody of it. And you get dollars back almost instantly. Depending on how much you're borrowing, we might wait for a certain amount of time for the Bitcoin transaction to confirm. But you get your dollars almost instantly, faster than any other platform. You literally just answer like 2 questions and you get a loan. It's super easy. Your loan capital is dispersed right now in stablecoins, so like digital dollars. All of that is fully abstracted away from the user. So they just receive like $1, and then they can move that dollar peer to peer, or they can withdraw to their bank account. Lava has global off ramps built into the app, or a user could take their digital dollar. We have a card; they can spend it directly from Lava if they want to use our card, or they can even swap it into other forms of digital dollars, because now there's like dozens of different digital dollars that people want to use. We have one, Circle has one, Tether has one, all of these ones. We offer zero fee swaps that are also like, private as well, that someone can access. But most of our users, once they come into the app, they either borrow, they use our card to spend, or they withdraw their money to the bank account.
I see. Gotcha. So that's the overall flow. And then in terms of inside the app, people can flip between Bitcoin and stable coins, or between your, is it Lava USD?
Yeah, Lava USD, but it's really fully abstracted from a user. Like the way I kind of think about stablecoins is they're just different payment rails. And we can kind of talk about this more for dollars, right? They're just like a different payment rails, just like in the traditional fiat world, we have ACH, Wire, Swift payment rails. Stablecoins are just like a different payment rail. And we try to like just like how when you use a banking app, they abstract away your interaction with these different payment rails. We try to do the same thing.
I see. And I guess there has been a lot of interest in lending recently. It's something I'm seeing a lot of people talking about it. I'd say it's one of the big topics, in recent months, let's say. What has been your experience there? Are you seeing a lot more interest in this cycle this time around?
I mean, we've seen a lot of interest in it since we started, and we've only just been growing. But I can definitely see that, at least on social media, it's become a bigger topic recently.
Yeah, and then obviously there's a lot of comparisons with what went on last cycle with the BlockFis and the FTXs and Celsiuses of the world. Um, do you have any comment on that? Do you think that it's sort of like we're just going to see the same kinds of things play out again and again? Where do you see that going?
I mean, a lot of what happened in the last cycle is what inspired me to start Lava. So previously, if you wanted to borrow against Bitcoin, like in 2022 or before, you had to give up full custody of your funds. That means literally giving your Bitcoin to a custodial lender like BlockFi or Celsius or FTX or Genesis or one of these companies, right? And then they would take your Bitcoin. You would have no idea whether they're rehypothecating it or not. In fact, they were. And these companies lost tens of billions of dollars in customer funds altogether. Like it's very rare to see a whole industry collapse like how we saw. And unfortunately, it was actually like the Bitcoiners who lost the most then because it was mostly Bitcoin backed loans that these companies were making, not other forms of crypto backed loans, right? Um, and really, like, because of seeing that, for me, I got into Bitcoin primarily because I cared about it's like the ability to self custody my wealth. And, for me personally as well, majority of my savings, almost all my savings are in Bitcoin. And I want to be able to borrow against my Bitcoin without giving up custody without while knowing that hey, if I'm giving up my Bitcoin, do I have confidence that my lender is not trading my collateral, right? They're not rehypothecating my collateral. Are the rules of the loan going to be enforced automatically and reliably for me? And that's why I started Lava because I saw that people were able to achieve the same kind of experience that I wanted in other ecosystems, but with far weaker assets, right? Like ETH or something like that. And I don't want to, that's not my savings asset. I wanted to do that with Bitcoin. And that's really what we've built at Lava is a way that you can see these custodial lenders, you can see they have so much adoption, but you can see they're so insecure. And the way they build their products is not really aligned with the ethos of Bitcoin to start. And with Bitcoin being not just the best form of money, but also programmable money, we were able to build a system that is more secure and gives people more cryptographic guarantees when they use Lava that their collateral is safe. So I think it really
Gotcha.
solves all the problems that cause these custodial lenders to fail. And I already see that like a lot of our customers come to us. Some of them have been stacking Bitcoin. Some of them lost their Bitcoin when they were using like BlockFi or something like that, and they're like, okay, I don't want to make the same mistake. So I actually think that we're preventing a lot of those people. We've seen a lot more adoption even than some of these new custodial lenders that are popping up nowadays as well. So I think Bitcoiners are aware of the problem and now have a solution that can solve it.
Right. And one other question on the overview side before we get into maybe some of the technicals. Can you give an overview for us on the interest rates and the costs? Are you charging an origination fee? What's the typical interest rate people are charging? What are the loan sizes you're offering?
Yeah, I mean for loan sizes, we have like we started lending partners now. We can do any loan from like $100 to hundreds of millions now. We've like we can talk about how we do the capital side later. But we're able to fund loans of all sizes globally. Our rates are the lowest in the market, so depending the rates kind of depend on the loan amount and the duration of a loan. But they can range anywhere from 5% to 11% today, and there's also like an origination fee that we're kind of like playing around with between like 1 to 2% that gets charged on loan. When you go take a loan on the app, you will see all of this before you borrow against your Bitcoin. So you know exactly what fees you're getting into. There's no like early repayment fees or anything like that as well. Or no, like no hidden fees. All the fees are like right available to you when you go borrow on the confirm page.
I guess one other question on the flow, is there a way to roll over? So let's say you do a loan for 1 year and then you want to do another one to to automatically pay off the first year and start a second year loan?
Yeah, exactly. Yes.
Okay,
Yeah.
so basically you do have that feature.
Yeah.
Um,
There's a lot of like
yeah.
I kind of like group all these ones. I kind of think about it like you're taking out a loan. There's ways to close a loan, and then there's ways to like refinance loans, right? And the refinancing could be extending it, adding collateral, removing collateral, borrowing more, partially paying down a loan. All of these are kind of like the features we have.
Yeah. And then while we're talking about structure, I might as well also talk about LTVs. So what kind of LTV are you offering, what's the range that you're able to, that the borrower is able to stay within?
So right now, like all loans, we initially let borrowers like customize their initial LTV, but we just realized everyone was choosing like 50% as their initial LTV, so that when you go in the app, like default, that's how like that's the LTV you get. But if you want like a custom LTV, you can get that as well. We
Gotcha.
can
So
like
I guess just for simple terms, you put up $10,000 worth of Bitcoin, you can borrow $5,000 of stablecoin as an example.
yeah, yeah.
Okay. Okay. So yeah, let's talk a little bit about the technicals and what exactly the trust and security models are. As I understand with DLCs, there is a price oracle, so you're at least putting something there. But I guess, can you just give us an overview? How is the DLC model being applied here in the lending context?
Yeah. So I think like in general, the way I kind of think about it is you want to make sure when you're borrowing against your Bitcoin, you want to make sure you're using a secure system. So a system that can't get hacked, right? Because that's also a big risk. We've seen custodians get majorly hacked. You want to make sure there's low risk of bugs, and you also want to make sure that there's low like trust like risks as well, right? Um, and really, I think what people really care about more, mostly on the trust side, is do I know that my Bitcoin is not being traded, right? Like, do I know that when I'm locking my Bitcoin up, that it is not being rehypothecated and traded? Because that's exactly what the custodians were doing a couple years ago, and some custodians still are doing today. That is risking customer funds. So when you borrow against your Bitcoin on the rehypothecation guarantees, you literally can see, you can independently verify on chain that your Bitcoin is locked in this address, right? And it is not being traded, it is not being rehypothecated. You go to Lava, you open the app, we literally show you in green, like, hey, click this button, go to mempool.space, blockstream.info, whatever your favorite block explorer is, or your node, whatever you want to do, you can figure out that your collateral is not being traded and rehypothecated. And that is like extremely strong cryptographic guarantees that your collateral is safe, that it's not just legal or reputational guarantees from us, it's cryptographic guarantees that you have.
Yeah. And so can you explain the liquidation and margin call aspect of it, and what are those levels? And then we can sort of get into how that's implemented at the DLC level.
Yeah, I mean that stuff I think is like a little bit I guess like more straightforward. Like any lending system, you're taking out like over collateralized loan, right? So you're locking up more collateral than you're borrowing. That's why you can get that's like the lender wants to make sure if you don't repay the loan and if the capital goes to the collateral value goes to a certain threshold that they can liquidate it. Obviously we give people notifications ahead of time and people can add more collateral ahead of time as well. But let's just say you got to a level where the loan needs to liquidate or even expire. Expiration is a common thing. Sometimes people are at the end of the loan term and they're like, oh, I don't want to repay my loan. I just want it to expire. And some of the Bitcoin will go to the lender and some of it will just come back to me automatically, right? Um, and you need like some way to know the price of Bitcoin to decide that. And so we just use every like lending system, every loan system has a price engine, like a price server. In Lava's case, actually, like the price server is private because it doesn't know anything about the user, and that's kind of like the real like differentiator. It's called like an oracle, or like a price server, and that's basically used to determine the uh like the price based on how much to liquidate or how much to expire of a loan. And the nice thing about DLCs is that these, like I said, these price servers can be fully private, and they reduce a lot of these. This gets like really technical. I don't know how technical you want me to go, but in like Ethereum, you also have these like a concept of these like price servers or oracles for other smart contract systems, like the Ethereum adjacent of what Lava is. But in those systems, these oracles have to attest on chain the price of the asset, which is not scalable. It's also unreliable because what if the transaction doesn't get in the block? And also creates this whole like issue called like miner extracted value, like Oracle miner extracted value, which because DLCs and what Lava is doing don't require these on-chain attestations, you kind of remove all this like scalability, reliability, and kind of security risks that these contracts, these similar parallels have in Ethereum. Um, that's like very technical, but
Yeah, gotcha. Okay, so let me try to explain as I understand DLCs. Now, you're the expert. You tell me what I'm getting wrong, but the general idea. So I guess if we go back to that example, so let's say I bring $10,000 of Bitcoin and I want to borrow $5,000 worth of dollars, stable coins on the platform. And as I understand DLCs, it's like my app is signing all these states based on the different prices. And then at the end of the loan term, I guess I'm kind of oversimplifying a bit, but at the end of the loan term, the price oracle is going to broadcast something out, and then that price will make one of those states valid, and then that will sort of help enable me to, let's say, take back my Bitcoin at the end of the loan, or give some back to Lava or whatever, right? Have I got that right, or do you want to elaborate a bit there?
That's right. And like kind of like the broadcast term is what I am trying to be precise about. The Oracle doesn't have to broadcast on chain. And that's
Right.
like kind of a very
Yeah.
core benefit of DLCs versus even Ethereum smart contracts. It it makes sure that Bitcoin doesn't have this Oracle MEV thing. It also makes sure there's no scalability or reliability concerns. So it's actually I think a more superior form of doing advanced scripting on chain.
I see. And so when we say it's not broadcast, is it just where exactly is it published somewhere, or like can you explain that part?
Yeah, it's just like a off-chain like signature
Yeah.
review. So all these systems, they're just it's so similar to Lightning. It's like off-chain
Yeah.
communication that settles on-chain ultimately. So off-chain execution, on-chain like settlement.
Gotcha. And so I guess, yeah, coming back to that example, for example's sake, the price of Bitcoin drops, I don't know, really a lot, like 60% or whatever. I get liquidated. One of those states that I signed back at the start of that loan is now valid based on what the price Oracle has put out off chain. And then at that point, the Bitcoin would go to, I guess, on Lava's side, and then on your side, you would need to, let's say, sell that back for fiat to pay back your capital provider, etc. And in the other case, well, I mean, if you could just walk us through like those different cases, just to get a loose awareness of that.
Yeah, I mean, so basically, let's go through the life cycle of a loan. So you initiate a loan, happens like atomically, you lock your Bitcoin, you get your stable coins, and then you take your dollars and you withdraw it to your bank account, you use a card, whatever you want to do with those dollars after. At one point, maybe you want to repay your loan, right? So let's say you want to close your loan. How does a loan close? You can repay it, you repay your loan, and you get your Bitcoin back atomically. You don't want to repay your loan at the end of your loan term. You don't want to refinance it and keep it open for longer. You can either repay it or you can just let it expire, in which case, based on the price, some amount of the Bitcoin goes back to you and some amount of it goes back to the lender. And then there's a case where, okay, during the life cycle of a loan, if your collateral drops a lot and there's like a time period where you can add collateral, let's say you don't, you let the loan like liquidate. In that case, the loan liquidates and the Bitcoin goes to the lender. And that's all based on the price of Bitcoin. And then basically the idea is that the price of Bitcoin is being attested to by this like price server, this liquidation engine, this Oracle, whatever you want to call it.
Back to the show in a moment. This show brought to you by CoinKite.com, the creators of the best Bitcoin hardware security devices such as the Cold Card Mark IV and the new Cold Card Q. Now, we use Bitcoin hardware security devices to keep our keys offline, our private keys offline. Now, the way these work is you can do that setup, write down your 12 or 24 words on the seed word cards, and keep that secure. Now, you can use this device to interact with the Bitcoin network using software such as Sparrow Wallet, Electrum, or Vector Desktop, or Nunchuck as a few examples. Now, you have a range of security features that you can use with these devices, such as passphrases, you can use seed XOR, or my favorite is multi-signature. Now, if you're starting in a basic way, just start with the device and the USB-C cable, plug it directly to the computer and use it that way, and then later improve your setup. But I believe these devices are great at helping secure your coins, especially as you start to migrate up into multi-signature security. But don't be disheartened or don't be scared away. They are accessible, and I think you actually do learn about Bitcoin in the process. So to get yours, go to coinkite.com, use code Livera to get a discount on your cold card. This episode brought to you by Galloy. They are building banking software for the Bitcoin age. So if you are with a bank, a fintech, or a startup looking to offer some kind of Bitcoin product, whether that is a Bitcoin collateralized loan, deposit accounts, or payments, Galloy can help you. Their latest product is called Lana. It is a loans management platform, and you can use this to come to market quickly and offer a loans or Bitcoin collateralized lending product for your customers. Now, Galloy have a lot of experience in the space. They started with Blink Wallet in 2020, and they've since grown this to become a community favorite over time. And so they have a lot of experience making things work in a secure, reliable, and scalable way. So if you need assistance coming to market quickly with a Bitcoin banking product, such as lending or deposits or payments, talk to the team at Galloy. You can email them. The email is biz@galloy.io, or go to the website galloy.io. And now back to the show. And then can you explain for us how it works in the case of, let's say, topping up collateral or partial repayment of the loan in fiat? So back to our example, let's say I borrow $5,000. Let's say I earn $2,500 and I want to partially repay that back. Is that possible? What does that look like in the DLC?
That's just like updating it. You just like kind of update it with your lender. And you just like it's like these like all these like refinancing features. So you can kind of like update. It's you can obviously similarly think about it to Lightning, how you can kind of update the channel state over time,
Yeah.
right? It's like a very similar concept.
Gotcha. And then similarly with adding more collateral. So let's say, the price dips a little bit and I think, okay, I better add some more collateral. So I'm going to add another, $5,000 worth of Bitcoin into my collateral. Similar concept there, or how does that work then?
Exactly. Yes, it's totally similar. I think the beauty of this is I honestly don't think we're doing like very much like I don't think we're doing any like financial engineering, right? Like we're taking like a very like people borrow against their equities, people borrow against their houses, people borrow against their gold all the time.
Right.
We're just taking the same features of those loan systems and just implementing them in a more like smart contract, cryptographic way, so that users can have more guarantees. Because like that's the beauty of Bitcoin is like a cryptographic system, right? It's not just enabling peer-to-peer payments. It has these like programmable qualities to it. What we're just doing is embedding a loan contract into a smart contract, if that makes sense. And so all like the financial like functionalities there that you would want to see in any loan system when you borrow against your equities, all of those like features are there. They're just embedded into this smart contract so that users can have more cryptographic guarantees. And also I think users can have just like more security guarantees. I think the fact that it is more non-custodial is even better from like a bug hack risk perspective, because you're not just giving your Bitcoin to this person to just custody, and if their custody setup fails, your Bitcoin is lost, right? You're embedding it into the smart contract that's formally verified, that you know all the output conditions to. So you have a lot more guarantees on security as well.
Yeah, interesting. And as you say, it's definitely different from what kind of is already popularized in the space, at least in the Bitcoin world, where people might be familiar with, let's say, the multi-sig lending based startups or just straight up custodial startups, where this is like, maybe it's a bit of a new technology that people aren't familiar with, but that technology, this DLC underlying what you're doing with Lava, it can arguably, and does give a certain assurance to the borrower, the customer in this case, that his coins are not being rehypothecated, that they are still in that DLC contract on chain. So it's definitely a different thing. But I guess maybe this is interesting. Have you found any challenges communicating that to customers? Are they unsure about this because, hey, it's a whole new concept, it's not what I'm used to? What have you found there?
No, I think people really understand it. Like, honestly, like I think when we communicate to people that it's really resilient from bugs, just because of the way the system is built and you know all the output conditions ahead of time, I think people really understand that. I think that's like a very unique property of any Bitcoin native application, just the way Bitcoin is built. It kind of forces this uh like output, like you have this like kind of guarantees on all the output conditions in Lightning or even Lava or DLCs. So I think people really understand that. I think people love the fact that Lava is like the only place they can really go where when they borrow against your Bitcoin, they see it on chain. I think people love that. I think that makes it very clear to people, because they go to like mempool.space and they see their collateral address. They see the money moving from their wallet to this address. They see like the stable coins being dispersed. There's a lot of transparency. Um, and so kind of like the proof is there. I think people really appreciate that. And I think outside of that, people really we have like the lowest rates. People really like that too right now. We have a
Yeah.
very like other than like Lava is the place where you get these cryptographic guarantees about security. You get the lowest rates, and you get privacy, and you get the fastest experience to get a loan. So actually, we've seen a lot of growth, honestly. For us, actually, the challenge is kind of like talking to all the customers, and we're hiring people. We have like less than 24 hours in which we communicate to any customer inbound. So we're trying to keep that, maintain that, and really provide the best product experience to like Bitcoiners essentially.
Okay. And so yeah, we've spoken a bit about the Oracle aspect of it and the DLC aspect of it. Now, one concern people might have is, let's say, how much coin do they want to keep, hot or internet
Yeah.
connected, let's say, on their phone versus like, hardware wallet support. Is that a concern you found people have, especially for larger amount loans? Like if we're talking, millions of dollars or whatever, are they literally just running it off their phone with the keys there,
Well,
or yeah,
like when the collateral is locked in that smart contract, that's not hot, right? Because it's just there. Uh,
right,
and we do have people. So it basically depends on how do you get from your wherever your Bitcoin is when it's not locked in that smart contract, right? So how do you get from your whatever your self custody or even custody setup is to the smart contract? The smart contract is really secure. It's not hot or anything. So that's fine. And then how do you get back, right? But that's a totally separate problem. Then it becomes a problem of like, how do you how do you deal with like your own custody setup? Because we're actually enabling ways. It's not released yet, but it's in beta of people just being able to take any custody setup and just directly move money to the
oh,
smart
I see.
contract.
So you could like directly withdraw your, let's say at the end of the loan, you could directly withdraw
Yeah,
them into your multi-sig or
yeah,
whatever your deep cold storage is.
exactly. Yeah. So if people want to do that, they can do that as well. But honestly, like the majority of Bitcoiners don't. They just use like single sig, right? Anyways,
Yeah.
already.
And
So
so I guess most users are just comfortable with just the phone app for the security aspect of it.
yeah, yeah, exactly. So I mean, honestly, like most Bitcoiners literally just use like single sig to custody. Like I've talked to people who custody like hundreds of millions of dollars of Bitcoin. Maybe like billion plus in just like a single sig wallet. So yeah.
Yeah, I mean, to me, that's crazy. Like, I would never even, but hey, people are gonna do what they're gonna do. And so,
It becomes like a totally
yeah,
separate conversation, right? Like we can have like probably like a whole episode about self-custody and all these custody things. But I would say it's like outside of the context of like the loan side of things, if that makes sense.
gotcha. Um, okay, so let's now compare what you're doing with what already exists out there in the market. And as I understand, there's maybe a few different categories that we can sort of talk about. Like in the
Yes.
Bitcoin world, let's say there's the Unchained Capitals and the Ledins of the world. There's Hodl Hodl Lend. There's Debify. I know there's a new one in Europe called Firefish. And then there's Lendersat as well. I think they're also looking at like a DLC style also. So that's kind of in the Bitcoin world. And then I guess you've got the custodial style stuff. And then you've got, let's say, more shitcoin, wrapped Bitcoin style stuff as well. So do you want to just give us a bit of an overview? Where does Lava fit into that ecosystem?
Yeah, I mean, I think that if we even look at like the comparison, like what we get questions when users come to us and they email us or they message us and they're like, "Oh, how are you different?" The real things people ask us about is like the non-custodial, which I think Lava is like really uniquely stands as the best. So they're usually evaluating non-custodial with custodial or
Yep.
bridge custodial. So basically, like the two forms of custodial, right? Custodial, there's like a few ones you mentioned, like Ledin or let's say like the Strike product is a really good example of like what those two companies are the ones people generally ask about. And then in uh, kind of like the other custodial is like custodial bridged. They ask us about wrapped Bitcoin. So like there's like WBTC and Coinbase BTC, so CBBTC, and you can go take those wrapped versions of Bitcoin, which are custodial. onto Ethereum and then borrow against it on an Ethereum protocol. Does that make sense? Um, and
Gotcha. Yeah.
so,
So I guess just for listeners who aren't as familiar, these wrapped Bitcoin protocols are usually like, I think BitGo is behind like WBTC, and that's like a very, very historically popular one that's been around for a while. As you said, CBBTC, which is Coinbase's version of that. And
yeah.
then I guess there are some of these different protocols that people are using. One I'm hearing about now, I've never used it, but I've heard this called Morpho, and apparently there are lower interest rates available on that, so that's why some people are into that. And then various other kind of in the shitcoin world, that's what people are doing.
Yes.
And you just have to think of it as a custodial Bitcoin, wrapped Bitcoin or bridged Bitcoin, right?
Yeah, exactly. Honestly, in my opinion, um, when you use like, so I think the real difference is between something like a Strike or Aladdin and a Coinbase or whatever, like a wrap Bitcoin thing, Coinbase BTC or Vertical BTC. They're both custodial, but when you go and borrow against it on Ethereum, you're taking on all these like risks of Ethereum smart contracts, which are way more risky than like Bitcoin smart contracts. But you're taking on that, then you're also taking on this. So all these Ethereum protocols, they don't offer fixed interest rates. They offer variable interest rates, and the
Right.
interest rates, so while the interest rate, for like a loan might be lower than maybe some of these custodial lenders. What you're really seeing is you're taking on a lot of interest rate risk because the lender capital on the other side, um, is not locked in. So when the lenders want to withdraw, interest rates spike, and they spike based on the liquidity on the other market. It's a horrible like financial product. There's like a reason why TradFi doesn't offer variable rates that are based on liquidity in the market. Sometimes like you'll get a loan in TradFi where it's like a variable rate loan, but it varies based on SOFR, like the Fed rate. There's never a TradFi product where you get a loan where the rate depends on the liquidity on the other side. So in Morpho and Ave's case, if the lenders, like the stablecoin lenders, want to leave, they want to withdraw their funds, the protocol guarantees them that they can withdraw their funds at any time. So they have to spike interest rates and margin call their current borrower base. So it's super risky, and this happens all the time. So I think it's a very bad financial product. You're taking on all these like Ethereum risks, and then you're also taking on custodial risk, right? Um, and so you're really getting like no benefit in using those products. Um, so that kind of is how why Lava is different, right? Lava is fixed rate loans, it's non-custodial, it uses this formally verified Bitcoin smart contracts. It's honestly just superior in all ways to uh these Ethereum protocols and these wrapped protocols as well. Also, bridges are just like insanely risky. Like there's been like billions in
Oh,
hacked
there's
funds.
bridge hacks all the time. Yeah.
Exactly. So, I mean, that's just like a horrible product. There's custodial Bitcoin backed lenders. So there's Strike recently launched a product, and there's like Let In. Strike like literally tells users. I think that product is very fascinating to me because I was surprised that they launched it. I was surprised because they launched it without telling users where the Bitcoin is custodied, which I think is like not great at all from a transparency perspective. And they also don't like they rehypothecate, but they don't really tell you how they rehypothecate. So it's like very low transparency. Um, it's like
Yeah.
worse than like these
But I guess,
20.
I mean, to be fair to Malaz and them, it's like early days for them, and they're probably still figuring it out. Like, it's not like they've been offering this loan product for a long time. I think they just kind of just now launching it. I'm sure we'll see more on that side. But nevertheless, as you said, I mean, there is the categorical difference of it's a custodial product versus self-custodial DLC style.
I mean, you obviously like you lose privacy when versus when you use Lava, you lose custody, the rehypothecating. So you're taking on like rehypothecation risk, and you already saw what happened with that in like 2022. Um, yeah, I mean like I think they have higher rates than us also. It's like slower to use. Like you give up all this documentation. They're not global. They're not even available in most places in America. So I think there's like very clear benefits of like using like Lava versus them as well.
Gotcha. And I guess in a similar bucket, but let's say TradFi, like the TradFi world may enter this with a bit more gusto, let's say, and they may start offering competitor products as well. And obviously, this will be kind of another form of custodial, but they might be able to offer different things, or maybe for the normies, they might be more comfortable with that kind of product. So, do you have any thoughts on that? Like, if let's say large US banks were to start offering this, or elsewhere around the world?
I mean, we work with TradFi to fund, like, on the lending side, if that makes sense.
Yeah.
So, um, yeah, I think like if there's gonna be like I think there's TradFi. The way I think about it is like there's banks, like people with capital, right, like dollars to fund loans, and they will work with a variety of these different loan products, and we work with them too. Um, and then what Bitcoiners should care about is like how they want to get their custody set up, like right, like there will be like someone like Strike or them, like now Bitcoiners compare the rehypothecation or custody risk versus Lava's non-custodial, non-rehypothecation, and they can kind of choose which one they want to choose, right? But I think TradFi is already in this game. It's already funding loans. So it's not like TradFi is not here anymore.
Correct. Yeah, I guess what I'm saying is more like if they were to directly offer it themselves, as opposed to participating on the capital side. So maybe we'll see that happen later this cycle. For all we know, I mean, if there's a ton of interest in lending and a lot of money to be made here, then that's could be interesting. Interesting. While we're on this topic of the capital side of things, do you have any reflections or thoughts on why these people are offering this, and why okay, let me back up a step. For a while, one of the criticisms of these Bitcoin-backed loans was, oh, look, the rates are so high. It's depending on times in the history, it might have been 14, 15%, like very high interest rates, or even higher. And the argument I've heard is, look, it's coming down over time, but we're just not there yet. What's
Yeah.
your perspective on that? Do you agree, disagree? How do you see it?
Um, yeah, I think like a lot of lenders, I actually think like we've reduced like I think one of the reasons why we have lower rates is because of some of the benefits of Lava, that it's like very secure. Even from a lender's perspective, they know that the collateral setup is secure, can't get hacked. There's like reliable guarantees about liquidation. So I think that's been able to be a feature for us, that's been able to enable us to offer lower rates. And then the other thing that I think has been a driving force in Lava's ability to fund larger loans and offer lower rates has just been the amount of capital that is moving into the space. Regardless of like politics, like bec the recent election in America, where a lot of the capital obviously in the world is in America, right? Opened up the room for more people to fund loans as well. And that's obviously like benefited Lava and increased our ability to offer rates at loans at lower rates and also higher loan amounts. And that's only happened like that. Those floodgates kind of opens, and that's you see the trend is on rates just going down over time, just based on supply of capital increasing.
Yeah, I see. And I think it's probably also fair to say that when people compare typical loans, like, okay, why the home loan rate is so much lower than these Bitcoin loan rates, I think maybe the uncomfortable answer is that really those home loan rates are Fed subsidized. They are effectively fiat subsidized loans, whereas up until more recently, a lot of the Bitcoin loans were not so close to the Fed printer, or not so close to the money printer, and therefore people were not as easily subsidized, and therefore you're paying a higher rate for that.
Yeah, I mean honestly, like also depending on like your duration amount, the rates on Lava are lower than what you could do getting against a house. And I'm like a very base Bitcoiner at heart. I think like over time, this used to be more of a meme in the Bitcoin culture, like sell your shares, sell everything, like hodl Bitcoin. I think like I think as more and more people do that, they will kind of gain the benefits of kind of like shorting fiat, and being able to save more in Bitcoin and access like the lowest rates available. I think Bitcoin is just like the best collateral to as well because it trades 24/7. It's global. It can be stored very securely. Um, Especially with some like a setup like Lava. You have like really good guarantees about that you're not going to lose your money by even like lending on the dollar side against a Bitcoin secured loan. So, um, yeah, I think it just like makes a ton of sense to grow
Yeah.
Bitcoin's adoption as collateral, and I think this helps lenders. They get a like low risk loan that they can fund and earn a yield on dollars, but it really helps Bitcoin because I think like Bitcoin's in this phase where it's growing its adoption as a savings asset, and one of the main things we need is people to just be able to save more in Bitcoin, right? And having a very easy, global, secure way for people to be able to borrow against their Bitcoin actually increases like Bitcoin's rate of adoption as a savings asset. And I think it's like a very powerful tool to have.
Yeah, so I mean, I agree that it's great that there are options. I would caution listeners though that I think the days of big bear market drawdowns are not totally behind us. Like it could totally. I mean, none of us knows where the top is or where the bottom is, but just as an example, I could totally see hitting a top of like I don't know 250 or something like this, and then crashing over the next year to like I don't know 90K, just to pick a number, right? And there'll be all these people who say, "Oh, look, we're never going back below 100 again," and and then there'll be all these people who, because everyone feels like a genius in the bull market, right? And so there'll be a lot of people who just think, oh, it's safe now, corporate adoption, nation state adoption, we're never gonna, super cycle, whatever. Like, just, I would just say, people should be wary. But as long as you are, but at the same time, listeners of the show, I treat you as big boys and big girls. You make your own decisions, but just be wary that this has happened before and it can happen again.
I totally agree. I mean, I think that my goal is not to convince people to like borrow against their Bitcoin, right? I don't want to like convince people to. I just want to say that okay, if you do want to borrow against your Bitcoin, then I want to explain that okay, Lava is the most secure way for you to do so. That's like I never try to like give financial advice on whether or not someone should make a financial decision in terms of I think buying Bitcoin is a great decision. I think for some use cases, borrowing against Bitcoin could be a great decision, but it's not like my job to kind of focus on that. It's like to just kind of talk about like security and what products are available and where you get more security benefits.
Gotcha. Okay, let's talk a little bit about the stablecoin aspect of this because it'd be good to just hear a little bit of your thoughts on why you selected XYZ, why this stablecoin, not the other, and what are the ways you foresee the users, the end users of Lava, flipping around between them. So let's say they get, I don't know, USDC, but they want Tether or whatever, they want different coins. Can you just explain a bit of your thinking there on stablecoins inside of Lava?
Yeah, yeah, I can definitely like explain. And I think there's a lot of like misconception that Bitcoiners have towards stablecoins. And I think that really, I really separate everything in Bitcoin from everything in crypto, right? I think they're just like orthogonal technologies. Bitcoin is, um, like a new savings asset. It's new money, and stable coins and kind of crypto broadly is just a casino, but stable coins are just like a new payment rail um, for dollars. They're just like a fintech technology. And I think Bitcoin is more like a revolution in savings and money. And really what stable coins are at a high level for like the Bitcoiners who haven't played around with them at all, they're just these like digital dollars that you can send to people. And the kind of the benefit is they're like no KYC dollars, to be frank, is like I can send you stable coins and you can receive them without having the KYC, right? So I think that's like one of the benefits. They're like kind of permissionless in that respect. And what you really want when you like when you use a stable coin, if you're actually like holding any amount in it, is you want to make sure that stable coin is like legitimately backed by like short-term treasuries, because then you know that you have confidence. There used to be all these like algo stable coins. I don't know if some of the listeners on this pod might have
Yeah,
been
right. Well, Terra Luna is probably the the big
yeah.
example from last cycle, but there is a difference, of course, between the backed, the fiat-backed stablecoins, and of course, people should understand there's big differences in censorship resistance. All basically the big stablecoins have surveillance. They have
Yes.
forms of control, or where the provider can disavow or freeze those coins.
Yeah.
Obviously, that's different to Bitcoin, but like you said, for people who need to interact in the fiat system because, hey, we're not on the Bitcoin standard yet, then these are a tool that people are choosing to use.
Yeah, exactly. I think there's like so much to talk about with stablecoins because some of the listeners here definitely probably don't know the whole history of like algorithmic stablecoins versus like back stablecoins. I don't consider like I think algorithmic stablecoins. I think people have learned from, and so now even if you look at the trend, right, like, people are using actually dollar backs like treasury backed stablecoins, uh, and yeah, and then in the context of those, I think stablecoins are just like a better payment rail to move dollars. I think that's why they're seeing adoption. I don't think stablecoins need to be on Bitcoin. Bitcoin's focus is to be this new money, this new savings asset. It doesn't really need to be like a tokenization platform, if that makes sense. And I think,
Yeah.
well, I think one, it's like worse for Bitcoin because there's all these like centralization risks that come from these like fork issuers, which you briefly mentioned. Um, and these other platforms are kind of optimizing for being like fast, instant ways to move stablecoins, and the kind of technology requirements to do that is much different than what Bitcoin is trying to optimize for. And when you use like stablecoins on Lava, the kind of the benefit is you can get your loan capital dispersed to you anywhere in the world instantly. Um, you can move money like permissionlessly. You have a dollar-backed stablecoin. You can withdraw money to fiat if you want. So if you can move between payment rails, right? You can move between your digital dollars to uh, your bank dollars. You can even start paying through card payment rails like Visa, for example. So you kind of have this like interoperability. But we kind of try to abstract all that away. It's all dollars, and we're gonna figure out the easiest, fastest, cheapest way for you to move those dollars and spend those dollars.
The lead sponsor of this show is Bold, the best place to buy, sell, and save Bitcoin. For listeners in the US, Bold lets you secure your financial future with complete peace of mind by integrating a low-fee, Bitcoin-only brokerage with next-gen multi-sig vaults. With Bold, you can smash buy Bitcoin or set a DCA plan for only 0.99% fees and seamlessly deposit the Bitcoin direct to your Bold vault. The Bold Vault is a 2 or 3 collaborative multi-sig where you hold 2 keys and Bold holds 1 as a redundant backup, protecting against loss or theft. You can use Trezor, Ledger, or Cold Card hardware wallets to spin up a Bold Vault in just a few minutes, and the Bold Vault is the only collaborative custody vault available with 0 monthly fees. They're also offering 0 fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Try Bold today and upgrade your stacking experience over at getbold.io. And now, back to the show. I see. So with these, I mean, when we're talking about stablecoins and flipping between them and being able to, because for some users, this is their off-ramp, right? They're holding Bitcoin, they want to borrow against that to get some digital, fiat crypto dollars, let's say, or stablecoins, and then off-ramp some of that by either tapping their card somewhere or getting it into their bank account, again, tapping or getting physical cash to then
Yes.
pay in the shops or whatever. But then some of the concerns and things people have to think about now are, what are the exchange rates of these coins between each other, the stable coins? Is there like a slippage of, if you're doing larger amounts, are you going to end up paying a slippage because you're converting and there's like in the background some swap server and they're taking a cut? And, fair enough. I mean, people aren't just going to provide services for free, but the end customer, the end user has to think about, well, how much am I paying for that? And then I presume some of this is abstracted away as well, but gas fees, right? So if you're transacting on various, shitcoin chains, you need kind of a small amount of that coin to be able to move the coin around. So it's kind of things like that. So can you explain a little bit of those and how those are being abstracted away in Lava?
Yeah, I can explain all that. So one, all the gas lava is like it's still so surprising. We're still like the only self-custody app where we've abstracted away gas fees. Like even in crypto, these apps haven't done that. But we built this whole like system where you can kind of designate another fee payer, which is us, like fully trustlessly to pay your gas fee. So there's no gas fee or any of that stuff when you use Lava. All payments using digital dollars are 0 fee and instant. But yeah, so that can explain that side of things. And so I can maybe even explain like the different use cases that we see people do and the kind of like the experiences people have. So if you borrow against your Bitcoin, some people want to withdraw those digital dollars to their bank account. And we have off-ramp support within Lava where you can connect your bank account and kind of directly just send money there. Same day withdrawals are supported as well as like delayed withdrawals. And it's 0 fee for withdrawals, which is really cool for users. And we see a lot of people that in America or like a lot of countries, but in America in particular, people just withdraw their money to their bank account. I actually kind of view like a card as like another way to kind of like off ramp. So we can issue
Yeah.
people a card, and we're going to be doing a lot of stuff with the card, like rewards and all these type of things. But you can use that to like kind of interoperate with Visa, and you really get the same like you can add it to Apple Pay or Google Pay, and you get the same experience as like a Visa card that you have, right? Like no fee payments and um, you can kind of spend like anywhere in the world. So we have that. We see some people move the stablecoin, like digital dollar balance that we have on Lava, just peer to peer, and it's like zero fee instant payments for those people, which is cool. And then some people will take their digital dollars, and we already have like this like swap engine into Lava, uh, where some people will take their digital dollars and swap them for another form of digital dollars. The only people that do this are traders that use Lava. So they'll usually like take their digital dollars on Lava and they'll swap it to like USDC or something like that. And then they'll go move it off Lava because we don't support like all these like shitcoin casinos. They'll go send it to like a Coinbase or something, right? And then go trade it on Coinbase. So we have a form of users that does that as well. And
Gotcha.
sometimes some of our
So
users,
just a quick question on that. When people are changing Lava USD out into, let's say, Tether or USDC, these kinds of
yeah,
things, they still have to think about what network it's traveling on, right? Like, I mean, some of these different services, they say, oh, only pay on Ethereum to this address, or only pay
oh yeah,
using Solana or Tron or whatever,
mhm,
shitcoin chain. How
yeah,
does that work in the app? Like, are you just recognizing from the address type what it is, or what?
yeah.
How does that work?
Yeah, exactly. We have like actually like safety protections built into the app. So we try to protect users from sending to a wrong address. And once like a user swaps like Lava USD, which is our own stablecoin because we didn't want to give the yield back to Tether or Circle. We want to figure out ways to kind of reward customers with that. It's also like Lava USD. It's like its own thing. Basically, we've like launched like a backed digital dollar, very similar to like USDC, like regulated, audited. The reserves are held at short-term money market funds, custody by BlackRock. It's just like a competitor to USDC. Because my view is that stablecoins are fintech technology, and it's like you have like a service like Cash App or PayPal. Like Cash App doesn't just use like PayPal's bank account, right? Like they all have their own like kind of uh,
Like
treasuries that
routing
they.
details or whatever? Yeah.
Yeah, exactly. Yeah, and like that's important because like you don't want to just be we don't want everyone to be uh using stable coins that are just owned by USDC, which is effectively Coinbase, right? And so I think it's good to have like independent, differently issued stable coins that all like interoperate with each other at zero cost, which is how like fiat works, right? Like when you use like your banks, when you send money from a bank to another bank, um, it all kind of interoperates seamlessly with, and all
Yeah.
the users really think about is this just the dollar balance, right? A dollar
So
balance to a
is
dollar
yeah.
balance.
So my only question there is there any kind of slippage there? Like, if we're
No.
doing once you're doing larger amounts, is there kind of like you're paying a percent there because you're going from one type of stablecoin to another or whatever?
No, it's all like zero fee. All like my view is like all dollar payments should really just be zero fee, and that's what we've had. So we have zero fee on ramps. So like if you want to convert like bank dollars to digital dollars, or like just add money to Lava, it's zero fee. Want to move it back to your bank account, it's zero fee. If you want to move it within Lava, it's zero fee. If you want to pay with the card, it's zero fee. And if you want to go put it into a USDC, it's zero fee as well. And then moving that off platform is also zero fee.
Gotcha. So in a sense, Lava is eating the fees on that, but you're making it on the other aspect.
Yeah,
Got it.
exactly. Yeah.
Gotcha. Okay, interesting. So I think you were touching on this before about common types of use cases. Now, as I understand this market, generally speaking, I'd say there's probably two main categories, right? At least my understanding of it. I'm curious to hear what you think. But my understanding is you've got the people who, they have a lot of Bitcoin, but they don't have a lot of fiat. Hey, a lot of
Yeah.
people are in that, use case because, hey, they're bullish on Bitcoin. So they're borrowing against Bitcoin to pay living expenses or something like this. And maybe some of them are doing it in a short-term sense because they've got a bill that they need to pay and they don't have the fiat income right now to handle that. Or the longer-term case where they're actually borrowing and doing it kind of as a longer-term thing. So that's kind of one bucket in my mind. And then the other bucket, which I know is quite prominent, and especially during a bull market, is basically people want to lever up, right? They want to borrow against some coin, get some digital dollars or stable coins, whatever, and then again buy Bitcoin. So what are your reactions on that? Is that what you're seeing?
Yeah, I mean, so the use case, it's like why do people borrow against it, Bitcoin, right? We've actually seen like a very diverse use of funds. We just talk to users all the time and like what they're doing. It's been super interesting to me. We've had people literally, I'm not gonna like name their names, but they're popular people on social media that have borrowed against their Bitcoin to buy a house, which is pretty cool. Because maybe they don't have fiat income and like the way mortgages work,
Or it
especially
might
in
be
America.
hard to prove income, that kind of thing.
Yeah,
Yeah.
you have to prove income and um It's like also like a big kind of hassle to get a mortgage as well. There's like all this like documentation required. And like people just come to us like borrowed against their Bitcoin, bought a house. It's essentially like a Bitcoin mortgage, right? Which is kind of cool. And similarly, you can do the same thing with like buying a car. So that's like one-time large purchases. Like taxes, a lot of people did it with taxes. So they didn't want to pay their taxes. They didn't have like fiat to pay their taxes, so they borrowed against their Bitcoin. So they effectively like took like a converted their tax payment into a mortgage or like a Bitcoin mortgage, which is kind of cool, right? So they did it with taxes. People done it with cars, houses, vacations. So we've had people do it with that college tuition as well. So we've had people take these like one-time large purchases and kind of convert them into a loan, and kind of fund them with their Bitcoin collateral, but kind of like fund them with like a loan essentially, which is pretty cool. That's like the majority of volume, and then some people have borrowed against their Bitcoin. They kind of borrow like very frequently to fund like daily payments, which is pretty interesting. So not like large one-time purchases, but like day-to-day expenses. So they might borrow like monthly or whatever to, and then spend with a card. Does that make sense? Like you
Yeah,
borrow,
as their off ramp kind of thing. Yeah.
yeah, exactly. And then yeah, some people will borrow and then they're gonna go do the whole like trading experience, right? Like they'll borrow to buy more Bitcoin, or they'll borrow to go move that money into like a Fidelity or something and trade like equities, or move that money into the shitcoin world and trade whatever they want to do. So that's been like another use case of Lava loans as well.
Yeah, interesting.
And then
Um,
like the
yeah.
same product kind of serves like at least like the
Yeah,
loan.
different uses. Yeah, from
Yeah.
all the way from degens all the way to responsible individuals.
Yeah.
Of course, I encourage listeners, please be responsible. But
Yeah.
look, it's your money, it's your life.
Yeah.
Um, so I guess those are the kind of the key questions. I guess how do you see? I get okay. Here's a question I've got for you. A lot of wealth today is in like boomers in their TradFi broker accounts, right? It's not on chain per se. But do you see the, let's say, this market of, let's say, on chain finance really growing a lot over time? Do you think it's that those boomers will come, or maybe it's as the wealth passes down to their children, that they will be the ones who sort of really embrace, doing, Bitcoin finance and on chain things?
Like I totally think boomers they're already coming to lava. Like we literally talk to people who are like kind like so surprising. Like I thought we would get these like younger users, but actually like I tend to think that Bitcoin has like a relatively like from like an age perspective like old user base, but they're really early adopters. Like Bitcoiners,
Right. They're
um
like the tech savvy boomers and Gen X people, maybe.
that's the people that seem to have Bitcoin. It's like relatively like tech savvy, but like an older aged crowd. And they use lava. Like I've been just like so surprised. Because that's not what I thought when I
Right.
started
Because the
doing it.
stereotype is like degens on X who are all like maybe
Yeah,
20s and 30s and they're just kind of gambling on things. And that's kind of the stereotype, right? Even
that's
if
like
it's not
that's
necessarily
what
true.
crypto is, right? Like that's literally
Yeah.
what like crypto is, but not Bitcoin. I think Bitcoin is like a little bit more like serious crowd, and actually I think that's why like people
Yeah.
a lot of our users come in and they just already know about the security stuff. And I think that's pretty cool. Like people know how to self custody, people know like about DLCs, people know about Bitcoin smart contracts, Bitcoin script. People like not that much as like I know, but like they know like vaguely about it, right? They know like the value. I think it's actually really fascinating to me how much people know the value of seeing your collateral on chain. So they kind of understand like a block explorer and like how Bitcoin kind of like addresses and all that kind of stuff
Yeah.
works. So I think that's pretty cool. And then we've actually had like people like a lot of people they'll like email us and like talk to us, like get on a call with us before they take out a loan. But we even have some people that will just borrow against their Bitcoin without talking to us. Uh, and then like later message us telling us that they really liked the experience. And oftentimes those people end up being like an older crowd of people.
Yeah.
I think that it goes to show like I think the audience, the user base of Bitcoin is very different than the user base of any other asset. Um, if that makes sense.
I see. And it could also just be a thing of like if you're early-ish, or maybe because as I understand, Lava is relatively new as a company, so maybe your early adopters are going to be the more tech savvy people who kind of already know Bitcoin stuff. But maybe as you grow, And as the bull market progresses, then you'll start to get more quote unquote noob customers who maybe aren't as tech savvy about Bitcoin and don't really understand all these technical things about, oh, Block Explorer this and DLC that and so on.
Maybe. I mean, I think we've done like a pretty significant amount of loans. I would say probably the reason for this is because we serve Bitcoiners that have enough Bitcoin that they want to borrow against it, right? And
Right.
so
It
I
already
think
selects for the more tech savvy, let's say.
yeah, I think like I don't think it's gonna change because I mean we've been doing loans for a while now. And yeah, I think that it's going to stay this way just because of like the if you become a Bitcoiner, it becomes such a big part of your portfolio that you think about borrowing against it. Like you've already started to now understand about Bitcoin, right?
Yeah. And I guess now, obviously, podcasts and articles and all this new stuff, people
Yeah.
are doing their own research and figuring out, okay, what are the different options? What do I want to go with? And so on. So, yeah, definitely an interesting time. So, I guess if we had to answer the question, do you think DLCs are a technologically superior way to do Bitcoin loans? I presume your answer is yes. So, how would you answer that?
I think so. I mean, I don't think it's all about just like DLCs. And I think like DLCs are gonna change in the concept over time because we can go very technical. This might be like its own thing. Like covenants and Bitcoin scripting functionality changes will affect how we want to do, how we can improve like the speed to initiate a loan and all these other types of things over time. But
Right.
ultimately, I think leveraging like DLCs, Bitcoin smart contracts, Bitcoin scripts is definitely a more superior way to borrow against your Bitcoin. Like I don't see like a downside to it. That's why I started Lava is because I was like, this is like only asymmetric upside, right? Like you build this product, it's you see stuff on chain, it can be global, it can be more private. Um, I think that we have like substantial advantages in our product that enable us to offer lower rates to people. And so I do think it's like a more like superior. And that's why I think we see also like people borrow against their Bitcoin on Lava for various different use cases, right? Because it's not like I don't think it's as much of like a trade-off thing. I think just like a superior technology thing.
Yeah. So, yeah, it'll be interesting to see where that all goes, and if more people come to this because maybe cheaper rates or they really like the non-rehypothecation aspect of it. Um, I think it's arguable. I mean, this could also be another point as well because there's a lot of talk about are they rehypothecating coins and paper bitcoins and proof of reserves and all these kinds of things, but actually with DLCs it actually already solves some of those problems because you know it's not being rehypothecated. So I think that's certainly an interesting trend, and it might help alleviate the future FTX style scenarios.
Yeah, I mean I totally agree. Like with Lava, you know for a fact that you're not borrowing against Bitcoin, and then like your Bitcoin is being rehypothecated. You have proof. And I think that's like super valuable.
Yeah. Um, so I guess one other thing, it could it also just be because DLCs are relatively early. Like I know, was it Taj Dryja? I think came up with the idea like years ago. But it seems like maybe some of the startups that were using DLCs haven't really hit a certain level of traction until more recently, I guess.
I don't know if they're like that early. I mean, they've been for like 8 years, 9 years now. So, yeah, I
Yeah.
think like
Oh, yeah. Sorry. I mean, yeah. I mean, the DLC technology has been around for a while. It's just that
like
the
very well
startups
like
actually leveraging
audited.
it. Yeah.
I don't think that's like I don't think it's more of a technology thing. I think the technology's been like audited, tested pretty well. I think more it's like and I think people like we're all in Bitcoin. We think about it every single day, like all day long, right? But um, why love? I mean, a lot of the big lenders kind of prove kind of the demand for lending like 3 years ago, but then they blew up, right? And then kind of like Lava started. We built this tag, and then it was like kind of like how do you get capital, and now capital. I think it's like a perfect timing with like the demand being proven, the tech being built, and the capital moving in to fund the loans. And also I think like Bitcoin getting to a certain stage, like where now there are these like big like people Bitcoin has become like a pretty big part of people's portfolios to where like the demand for borrowing against it has become like a thing people start thinking about, right? Like now it's a bigger asset. It's like 100K per coin. And now people actually want to figure out ways to still fund expenses with it, right? In the beginning, it was more a collectible, a small part of people's portfolios, but like we talked to so many people and they just like bought Bitcoin early and now it like retired them. Like literally, there's so many people who are just retired on Bitcoin, and now they're like, especially as like the price has gone up recently, now they're figuring out ways to not sell it but like fund expenses that they have. So I think it like all of
Fascinating.
some
Yeah.
of like
Yeah,
the market.
interesting stuff to see. So, yeah, look, let's close up. If you can just let people know where to find you, and yeah, that'll be a great spot to finish.
Yeah, just if you go to lava.xyz, uh, it's our website. You can find everything about Lava there. And you can always email us, concierge@lava.xyz. My email is shazan@lava.xyz, so feel free to email me directly if you need.
Fantastic. Well, yeah, thanks for joining me, and yeah, I'm interested to see where all this Bitcoin lending goes this cycle.
Thanks for having me on.